Zach, it's so good to be here with you today after, what has been a crazy week of nothing, right?
Right. It's not like we have anything to talk about. And we say that every time, but seriously, the last couple of years have been just very dynamic times in the market, which is great because it means that we get to have these conversations, talk about what's moving in the markets, talk about the best ways to protect and grow your wealth. And today is no different. We've got a lot in the hopper right now.
Right.
Obviously, the big news is still developing as we work on this call, and that is the election. It appears right now that we're still going to have gridlock in Washington, which the markets will, or that we are going to be moving into a gridlock pattern in Washington, and the markets actually typically respond well to this because it means that the status quo will continue. So we probably won't get any really crazy agenda movement on the left, and at the same time, we won't get anything too far on the right to upset people on that side. So if we can continue down this path, then investors actually know a little bit more of what to expect. And one of the things that we've always talked about is how the market hates uncertainty. But if you even if it's not necessarily a good thing, if you know what to expect, markets can adjust to that. Investors can know what they expect to pay for different stocks. And it just helps to add a lot of stability to the market. So I'm actually very hopeful that the election results will wind up putting us in a place where the markets are more healthy, and also where our country is more healthy, where we have a little bit of dialogue going back and forth. We have some critical thinking, which doesn't seem to happen in Washington to a large degree, but maybe we can move forward in a better way. One thing, and J-Rod, this is kind of speaks to some of the research that you've been doing, and I've just been piggybacking on it and watching it, but we know that this is a seasonably strong time of the year and of the overall election cycle. So as we move past the midterm elections and look at the kind of the 4-year presidential cycle, you have the first year, this is moving into the third year of Biden's term, but the first year following the midterm elections, this is one of the strongest periods for markets historically. I just was looking at a stat this morning, and 100% of the 12-month periods from the midterm elections till 1 year afterwards have been positive in the market with some pretty strong gains. And of course, past performance doesn't guarantee future results, but it's nice to know that we've got a little bit of positive statistics behind us in the market right now. So I think we're in a decent spot in the overall market, and we could have some months ahead where it's a little bit easier to make money, which I like, because we've been through the tough parts. And that's one of the beauties of the way investments work. If you are able to protect your wealth, if you're able to conserve and not get just slammed by a bear market, then you'll come out the other side with your capital intact, and you can allow it to grow when things are easier. It's almost like, fouling off a pitch, to use the baseball analogy. If it's not the pitch you want, foul it off and live to swing the bat another time. And then when you get that fastball down the middle, then you can knock it out of the park. And I think we've got some opportunities to do that moving forward.
We do, right? But the Astros won the World Series, so the Phillies lost, which means that, there's no economic crisis, right?
That's true. Yeah. Fill us in on that, because this has been something that a lot of people have been talking about online, and it's kind of funny, but it's also interesting to see how things play out. So fill us in.
It's really funny. So, you go back to the 1910s, and every year that the Phillies have won the World Series, an economic crisis has followed. Like 1910, you had the panic of 1909 into 1910, 1970, get this
was
right.
it 87, the black market crash?
Ooh, I don't remember if it was 80.
I don't know if that was in there as well.
But, so the most recent ones, obviously 2008, the Phillies beat the Yankees, and, we were knee deep in the financial crisis. So it's kind of funny, but it's like,
Yeah, it's always interesting to see the correlations versus causations, which is the statistical description of, did one thing cause the other, or do they just happen to randomly happen at the same time? We've talked a lot about the energy crisis. And it's not just a here in the US crisis, but it is certainly hurting us here in the United States and around the world. Now, recently, I put up a chart on my Twitter feed of the diesel inventories, the amount of diesel that's available in storage right now, and that level has hit a dangerously low point. At one point, and I think it may still be true, but at one point in the last few days, we had only 25 days of diesel fuel available, which puts us in a pretty vulnerable place. If some kind of supply shock hits, or a storm knocks out some pipelines, or something else unexpected happens in the energy market, we may not have enough diesel fuel to move trains back and forth, to keep factories running and generating making the products that we need to have the trucks moving back and forth. And also, diesel is pretty much the same thing as heating oil, which is used in the northern parts of the country just to keep people warm and from freezing to death. So that shortage of diesel is a really big problem, and it's going to cause prices to move higher. That just has to happen. It's the way supply and demand works. If there's not enough of something, the price has to go higher so that some people won't buy it, and the people who are willing to pay a higher price are able to buy it. And this goes back to some of I try not to get too political with the way that we talk about things, but when it matters for your investments, when it matters for your retirement, then I want to tell you what is going on so you know how to react. And politics are playing a big part in the energy markets right now. One of the things that's been floated around Washington is some price caps for fuel, whether it would be for diesel fuel or oil in general, or some other refined products. And the problem with price caps is it doesn't help with the underlying problem. The underlying problem is we don't have enough of something and we have too much demand for something. If you make a price cap, it means that people who want to buy, and the price is lower now because it's artificially capped by some government regulation, there are more people that want to buy. So it means demand continues to be strong, 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 because there's not a price point that some people will say, you know what, I'm just going to work from home today instead of driving, or what, I don't need a shipment of this because it costs too much. So there's still just as much, if not more, demand, but it doesn't necessarily add any more supply. So when you use a price cap, what that does is it simply makes shortages of something. It doesn't make it better. It might make it better for a couple of days, but it leads to shortages. And we've seen that throughout history on large scales, and we've also seen it on small scale with things like individual products like diesel, gasoline, or even food products and so forth. So when you hear people talk about, price cap is going to help keep inflation from happening, maybe it keeps prices lower, but it causes another big problem. You can't fool the market. You can't change economic laws of supply and demand. And I really wish people in Washington would understand that, so that we don't wind up causing some big problems for us. When it comes to the fuel crisis that we've got right now, we're still pumping oil from the National Strategic Petroleum Reserve. So we're taking our emergency oil and using that for, an inflationary period, which I think is a little bit more of a political ploy than it is to really help our country. And then you have to worry about what happens if we have emergencies. We've got a war on the horizon with stuff going on with China as well as with Russia, and a lot of hostilities that are just getting worse and worse. And if we don't have our strategic petroleum reserve full in case we need that, it could wind up putting us in a much more vulnerable situation. It also leads to higher inflation, because as I was talking about, just because you have price caps doesn't mean that you don't wind up with shortages. And either way, we're going to have higher manufacturing costs, because companies are going to have to pay more for the diesel and the fuel that they need to generate their the energy that's needed to run a factory. We're going to have plastics are more expensive because oil is more expensive, which means that your packaging will be more. Shipping merchandise, whether you use train, truck, airline, whatever, is going to be higher because either there are shortages of fuel or the fuel costs too much, and even just costs for people getting to and from work. So all of this is to say that our energy crisis continues to make inflation a very big key thing that we need to worry about in our day-to-day lives, and also that we need to be focused on when it comes to how you invest. So J-Rod, that's really what I've got for today. Would love to hear your thoughts.
Yeah, I mean, I think you always do such a fabulous job after big events, or the headlines that are that are sloshing around and cutting through to what matters, right? The big thought is after an election, stocks are going to tank, or stocks are going to soar. Really, you've laid out what the data suggests, and then kind of where we are right now. And I think probably one of the biggest things that is probably not even in the forefront of people's minds is the diesel shortage that you were talking about earlier. That's huge. We could be in a place where we're breaking contracts with export contracts and whatnot.
Because we need it here,
right?
Yeah.
And you've talked about the issue of kind of reshoring and supply chain management. This could be one of those things where we start keeping for ourselves what we have.
The reversal of the whole globalization thing, which then leads to potential more tensions with other countries, because if you're a trading partner with somebody, then it should help at least soothe some arguments that you might have. But if not, then any other disagreements become a bigger and bigger deal.
Right, which makes all the sense that gold is back in favor again, and Bitcoin and all these other paper assets are not.
Yeah. May we live in interesting times, right?
Indeed. Well, as always, Zach, it's great to sit down with you, and I'm sure between now and the next call that we sit down and we'll have more clarity as to what government looks like, and hopefully some more clarity on what the energy situation looks like.
Yeah. Well, I do hope so, for sure. Thank you guys for being on the call today, and it's always a pleasure to get to talk to you.